What's up YouTube? Dougie Chong here. Welcome to my second episode. In this video I will be covering three main topics. The first one is what exactly is a TFSA. The second topic is why you should use a TFSA. And the third topic is what I think you should put in your TFSA. Once again, I am not a licensed financial advisor. This is for entertainment purposes only. So a TFSA account stands for tax-free savings account. It is a registered account here in Canada, similar to an RRSP or an RESP. The main differences are this account is completely tax-free. All gains you get, you do not have to pay tax on. That is an incredible advantage. When I say tax-free, I mean 100% tax-free. Unlike an RRSP, which stands for Registered Retirement Savings Plan, which you have to pay tax on the gains as soon as you take it out, the TFSA you never have to pay tax on any of the gains, which makes it an incredible investment vehicle. Now you might be wondering, well Doug, why doesn't everyone use a tax-free savings account? Well, simply there are limits to how much you can contribute per year. It's usually around 5 to 10K. You have to look it up each year, and the total amount is maybe 53K now. It's a relatively new registered program. I'll leave a link in the description below so you can calculate exactly how much your contribution limit is. You want to make sure you do not go over, or there are some steep penalties you have to pay. So that's in a nutshell what a TFSA is. Now, what are your alternatives? You can either do an RRSP, as I mentioned earlier, or just a regular account. A regular account, you'll be taxed 100% on the gains, so it makes sense to max out your TFSA if you have not done so already. In certain cases, an RRSP might be better, but I'll go over that in another video. It's a very special case where an RRSP is better than a TFSA. So now on to the third point. What should you put in this tax-free savings account? Well, for starters, your options are either a GIC, straight savings, or some sort of investment account. A GIC is basically a savings account with a higher rate over a longer period of time. A lot of financial advisors will tell you to go with this option since the interest on a GIC is usually taxed at a much higher rate than the capital gains of an investment account. However, the overall returns of a GIC are much lower than a typical investment account. It is just typically the safer option and will save you more tax. To do the comparison, a simple savings account will get about 1 to 1.2% interest. A GIC might get 2 to 2.5% interest, but an investment account will get upwards of 7% interest on a typical year. So my recommendation is that in today's society, where it's very easy to do a self-directed investment brokerage account in any of the major banks such as CIBC or TD, it's best to just set up one of these accounts. I personally have used TD and CIBC. I've seen TD has a much cleaner, newer looking user interface. I really like it, but the commissions are $10 per trade, whereas CIBC the commissions are only $6.99 per trade. And I've recently been looking into the Wealthsimple app, which has a $0 trade commission, which beats both of them. But it is a relatively newer company. Overall, these small commission fees of $5 to $10 won't add up to that much if you intend to hold your investment for a long period of time. That being said, having to pay a $0 commission for the exact same service is not a bad idea. I will be looking into Wealthsimple Trade in the future. That's it for this video, guys. Thanks for watching. Please remember to leave a like, subscribe, and leave a comment in the sections below. Hope you learned what a TFSA is and what you should put in your TFSA. I'll be making another video to show exactly what types of investment options I put into my TFSA account. Stay tuned. Till next time.